Welcome, Pat. Welcome. Normally I say happy Friday, but watching the news, I don't know. It's hard to be happy right now.
Yeah, no kidding.
It just,
Trying to limit my news on all, all this stuff. I feel bad for those people. Amazing.
yeah, the whole morality behind it and everything's it's just sickening. And now,
Yeah.
from what I understand, the latest news is that caravan is stopped, like 40 miles long. But today he's softening up the city. So they're lobbing a whole bunch of artillery into Kiev and getting ready to go in. I
I,
just hope he gets his butt kicked. So.
I know about a dozen 810 warthogs would take care of that convoy pretty quick.
Probably would. Probably
Yeah.
would. So we're going to take a look at what our 7-day moving average is here in the valley, and then we're going to glance over some um, uh, trends in the rates and lending, and then we'll hit the Cromford report. And today I'm going to go ahead and do a live update right here so I can get exactly what we have. But I believe it was something like along the line of 4,800 homes on the market, which that's where we've been. So nothing to report there. 7-day moving average, though, has gotten a little interesting in that when I look at this, the red line is the homes that are under contract. Took a little dip there. Number of listings went up. Now, 1 week doesn't make it, a trend, but it has done it before. We have had a gap. There's a gap of about 350 homes. So it warrants taking a close look. But Pat, then I discovered something else that was really curious to me. And that is homes that are called back on market. They were listed at one time, and for whatever reason, people took them off. Look at that spike of homes going back on market. And, maybe it's just
I
this.
lost your video or your sound.
Oh, have you
There
got
you
it
go.
now?
Oh, I
Oh, you
I
lost
lost
it
your
on your end?
I lost your
So,
sound. My thing came on. I'm sorry about that.
oh, okay. Okay.
Hold on.
It's not me, it's you. That's what you're
It's me.
saying. So,
There we go. I was like, you're
so
talking. Okay, sorry about that.
no, but this back on market all of a sudden has climbed over 1,000 homes. People that had their home listed at one point and then they took it off, and they all of a sudden they're putting them back on. It was rolling at about 600 units down
Mm-hmm.
here on week after week, and all of a sudden, boom, 1,000 units. So I don't know. I don't know what it means. I think it just means we're getting closer to spring selling season, and away we go. And but so with all the news and all the stuff that's going on, we kind of thought rates would dip a little bit, right? Have they?
Yep. Yeah, they have. I mean, we saw a run up in rates. This is obviously rates. Like I said, I pull up two different charts. I pull up the price and then the rate. So I got
Yeah.
the rate on this side. I sometimes probably confuse people because they see, I say rates are going, down. And I got this chart up there, but because they have an inverse relationship with rates and prices and rates. But yeah, I mean, as you can tell, I mean, people look for some prediction. Nobody's got, me or anybody who's been, some guys is getting paid $5 million a year to predict rates. They don't know. I mean, you look at this, I mean, you just see the volatility. I mean, these, the big green days are uh, not, not good for rates, but the red day, we had obviously a great drop in rates a couple days ago. But then on Wednesday, we just got slapped big time. This big green movement was over 109 basis points for for price and rates. So it was they've been all over the board. I mean, I expect rates have been whipsawed. You get the jobs market that came out. They had 678,000 jobs that they created, and they
Yeah, that
expected
one
like
surprised me.
400,000. But then you get the war news, so it's obviously everything's offsetting. The jobs are offsetted by the war news. So I mean, interesting about this jobs report. It's basically people. I always it's just really a survey that they get on the phone and talk to people. I mean, it's not like they count people. It's not because they get these wide swings in numbers. They do revisions the month after. They had a huge wide swing last month. So, it's these job numbers reports, I always suspect because they're always revising them the following month. So it just
Yeah,
gives you
yeah.
kind of a guide. So they don't actually count the people are going to work. They just do surveys,
They,
you
they,
know.
they they call employers, hey, did you hire anybody this month?
Yeah.
So
Yeah. And it's not,
like a
it's
small
not,
town I used to live in, the newspaper would call, anything going on in your family this week?
yeah. Yeah. So, I mean, we're seeing unsettling times. Oil's increased $108 a barrel. War's going on. There's just a lot of volatility. I mean, I think this is going to obviously cause, probably pull some people back from buying. They'll probably increase some in demand because people are like, I want to get in before rates really do go up. So, and the CPI numbers are coming out next week. So,
Well, um, one of the things I really want to caution people, because I know everybody's running to YouTube and trying to find out what's going on, but be careful what you see. There's some numbers coming out by certain people and even real estate agents. And, we don't, like you just said, $5 million a year. I can't predict. We're not trained to predict the long-term real estate market. And even the people that didn't get it right at all last year. So, we're trained to manage it through the mundane world of compliance and regulation, and to make the deal, to hold the deal together and to make sure that you don't get sued and the buyer doesn't get sued. But relying on real estate agents, when you see a number, cross-reference it, because there was a number that came out where this guy put and showed 2008, and then he showed 2021, and he showed new construction. And he says, this matches. Therefore, the natural conclusion is we're going to crash. So he has an agenda before he puts out the numbers. If he'd have dove into the numbers, especially here in this market, he would have discovered that it's the census data, and census data counts all homes that haven't even been built yet as new homes. So if there's a permit for the house and the foundation hasn't been paid, it's still counted as a new home. And even if it's half finished, it's counted as a new home. But the MLS doesn't count that until it's occupied. But then the devil in the details inside the numbers of the total number, Pat, is the majority of the homes are multifamily. In other words, apartments. So we're getting very close to saturating the market with multifamily homes, and we're woefully below 2006, 2007, 2005 numbers when it comes to new construction, and way below 2021, because right now they've stopped. So when you look at that chart and the guy goes, oh, 1.5 million, once you start looking at the actual numbers, it's nonsense.
mm-hmm.
Absolute nonsense. And so when you see numbers that are spouted, that's why I like here. Look, let's just look at the numbers. We saw the numbers today, and we saw that inventory is not going down. Hey, our other analyst is here. There we go. Hi, Jackie. So,
hey guys. Hey, Jackie.
My senior analyst walked out the front door, which is good because he's just been a barkathon this week. Driving me nuts. He looks out the window and starts barking at people. I have to get up and close the blinds. But when you're looking at numbers, and it's real simple, and every week we're just going to take a look, and well, here's how many homes are on the market, and here's how many are getting gobbled up. Until that changes, it's just a broken record. But then you see stuff like this is a headline, which is off of a pretty good source. Realtors report big decline in contract signings. I haven't seen it. RPG, hey, good afternoon. I haven't seen it.
Yeah.
Now in the Cromford data here, I'm going to pull this up. So, because the Cromford data, they're looking at real Arizona data, and he's a mathematician, and he's from England, and he's not a real estate agent. So he's saying here, housing market's just as tough for buyers over 1 million. The median sales price up 2.4% last month. And the numbers here show you the listing success rate, months of supply, everything is showing that prices are going up. For sellers, the median sales price went up another 2.4% over the past month. Considering the average mortgage rate increased from 3.1 in December to 3.55 by the end of January. So it didn't slow anything down. It slowed down a little bit, but nothing major. And when we look at what's going on here, this is showing there were a total of 9,073 closed homes in February, which is down 3% from last year. Well, guess what? That was all new construction. Because new build closings numbered 1,269, down 14% from last year. because they've backed off. They can't get the materials. And then now with the Canadian trucker strike up there, there's just no, there's nothing, no materials coming in. Resale closings were down 1%. But remember how Zillow was not reporting their sales? Had they reported their actual bulk sales, we'd be up versus last year. So the median price is up 455,000, up 27% from last year.
God.
So increases in new home prices were lagging behind resales for much of 2021, but they're catching up now. And it says all the figures above relate to single family and townhouse condos combined. So there doesn't look to be any relief in pricing right now. Looking into May, it's pretty easy to look at those numbers and say March, April, and May are still going to be pretty brisk. Do you know if vacant land data is tracked with single family home data? Esther and Jimmy. I don't think so. I don't think that's a different number. In other words, let's say you got a house on 10th Street and there's a lot for sale on 10th Street. Does that mean there's two places for sale? The way they track it in the MLS is two
different parcel numbers.
Yeah, and that's what he says here. He goes, all the figures above relate to single family, townhouse, condo properties combined, so not vacant land. And these prices are insane. It's crazy. But you still have to ask yourself, just because prices are going up fast, does that mean they're going to fall?
Yeah. Yeah.
That's the question everybody's asking, right?
Yeah, I mean, that's what the question I'm getting. That's the question I see a lot is like, just because, obviously everybody had the crash. Like we've talked about this a million times over the last year and a half, but just because we saw a crash in 07, 08, 09, I mean, we saw just a ridiculous. And once again, I mean, people have to realize that was all mortgage loan related, just handing out sugar or, crack cocaine to everybody and just saying, try this crack cocaine. And we're in a different environment. I cannot emphasize that enough to people as far as, we got equity. Look at that. I mean, there's the trustee sales. Even that, even if we saw a dip, I mean, we've got enough.
43.
Yeah, it's ridiculous. I mean, we got enough demand. If rates, I want to jump real quick onto something that. Let
me ask, running an altitude, you never know. I mean, it might not. We might be stuck here for a long time. Just because they've gone up in history has shown up and down moves. I've lived through several of them, up, down, up, down. That was my first crash, 2008.
Yeah.
So I'm sorry. I think I stepped on you there, Pat.
Yeah, you froze on me there. But can I just touch on something that I've run into about 3 times this week? I know we didn't talk about it, but there's obviously a lot of people that want to buy a home. And I just want to stress to people, the millions of viewers are watching this. So this is going to be probably broadcast nationally. So it's good to see.
It's worldwide.
I've run into people like this morning, gentleman, makes about $50,000 a year. He wants to buy a house with his girlfriend. He qualifies for like the $195,000 to $200,000 range, right? Nothing there. He's got good credit, but what I've run into this last week, 3 times actually, where you've got to check your credit and the spouse's credit, because I'm running into this where the husband, the wife's got great credit and the husband is just crap. I mean, it's just like, it's like 2 divergent credit scores, and it's killing. I mean, 3 people that probably, if they would have combined their income, you got somebody, if you got, a combined income, one person makes 50,000, other person makes 45,000, 35, 40,000, you got $80,000, $90,000. If you got low amount of debt, I think people would be surprised how many people could actually really, if they buckled down, look at their budget and tightened up, how many people could really afford a home. because they're paying $1,600, $1,800, $1,900, $2,000 in rent right now. But like I said, the three couples that I ran into this week, the wife had great credit. The lady I talked to last night, she had great credit. But she said she can't use her husband on the loan because he's got terrible credit. So it's just like,
see that a lot. Yeah.
I mean, you gotta, I mean, and then, what they do is they come to me, they're looking to buy a home. And, if you're, my biggest, PSA is if you're looking to buy a home next 6 to 8 months, if you're not, you talk to your spouse, see where both you guys are at, because, we cannot, people think that we can combine your income but not use your credit score. We've got to have both. If you're on the loan, we got to use your credit score. We take the lower of the two people, the middle score. Like I said, this lady had a 700 and her husband had a 550. They're dead in the water. He's a welder. He makes $20 an hour. I mean, all they want to do is buy a home, but they can't based on, her income. And another gentleman,
well, even that, I mean, I've got a young man I'm trying to find a condo for. So last week, 2 condos we were looking at. One of them, we set an appointment for 4:30 because he didn't get off work until 4. And by 4:30, it was under contract. Just went on that morning. Saturday, set an appointment to go see it at 4:00. Set the appointment. I was out of town. I was in Texas, and I used this showing service called Show-Amy. So I set up the service, everything go, and then 3:00 under contract. I mean, you can't even get out to see the doggone thing. And then this morning was talking. Here RPG said it's crazy. Think how much rent's got up. I see a lot of people moving in together. Yeah. Now, you wouldn't want to move in with me. I'll make a miserable roommate. But this is okay. This house, this thing's beautiful. It's a patio home, townhome, right? And it's Jensen Street in Mesa, and completely redone. Look at that. Fantastic. And the buyer that I was talking to, her folks wanted to see it. They're in their 80s. And I said, well, let me see what we can do. I pull up showing time. See all those black things right here?
Yep.
That means it's there's nothing available up until 8:15 tonight. Nothing. And now look at Saturday. Look at how Saturday's filling up already. It just went on the market this morning. It's the year of great disappointment. And here the kicker is the agent says we've already got an offer for $365. I mean, it just went on the market. Somebody got on the phone. I'll give you $365. He hadn't even seen it yet. But the pictures are really good, and he knows what he wants. But it's just going to be an absolute bidding war. I said, we can go out and take a look at it, but we can't today. And I mean, there's no room. And so it's
well, like you said, people have to be ready. I mean, like you said, you're going to see. I think you're going to start to see, people joining forces, maybe a boyfriend, girlfriend, or something like that. But people have to be ready. I mean, if they're going to join forces with somebody, like a husband, wife, or, whatever, it's kind of frustrating to see people that make decent money, but you can't use your spouse's credit because there's a credit repair company called Continental Credit that I use. It's like $80 a month per person. They can get in and, get their credit. It's going to take 5 to 6 months, but, I think, if you combine forces with 2 people, you can, their houses are still, you can make it happen if you, put your heads together.
Cromford Market Index showed that over the last month, 12 of the 17 cities approved for sellers, where the month before it looked like it was going the other way. And so it has gone in favor of sellers. 5 cities have moved in favor of buyers, which is Fountain Hills and Glendale are no longer on that list, but Surprise and Tempe have replaced them. So that's the red lines there. So, but it has moved by much. It's moved by 1%. So it's not my senior analyst is down here licking my hand. So, okay, now Ringo, how many homes are available on the market? This many. Good. He knows so much, but he speaks so little. So
that's what it should be.
I was talking to somebody this morning. They said their rent is probably getting noticed that it's going to go up like $2,300 a month. And so she wants to buy.
Up $2,300. Up, from like Like
Up to
2,300.
2,300. Yeah, up to 2,300 a month.
I got a buddy of mine who's I got a buddy of mine who called me up. He lives in an Optima. He's 1 bedroom, 1 bath apartment in Optima in Scottsdale.
Oh my God, that place is expensive.
$4,500 for 1 bedroom. They raised their rent 60 to 4,500, 60% up to $4,500 a month.
That's they raised it that much.
60% to
Wow.
4,500. Yeah,
Wow.
it's asinine. It's asinine.
What do you do? So if I look here, I mean, let's go ahead and take a peek here for just a second. And because everybody go, oh, you realtors must really like this market. You're making a killing. So let's go to single family, 300 to 400,000. And let's go to, let's pick Gilbert. Okay. And let's say that we want a pool. Okay. So we're going to say, and a private pool. I got nothing. Just nothing there. 300 to 400,000 with a pool. Now, if I get rid of the pool, what happens? 300 to 400,000. I got to be doing something wrong. There's got to be something out there, but it doesn't look like it. If I go to the list, your search has 0 listings. So let's go to Tempe. And there, this is giving me, it's cooking. That's not giving me anything. Something is not playing fair right now. I think it's the Russians.
Yeah.
So,
yeah.
Terry
made a good point.
They're already saying it's going to be $5 a gallon. Well, I don't know why the MLS is acting like this right now. But I did a search this morning, a certain area, Gilbert, for 400,000 and below with a pool. I got 2.
Yeah.
So, yeah, gas is going to be a problem. It's going to affect housing. But if it's temporary, it may affect housing for a while, right? And then if the gas prices go back down, then the buyers may be able to go back out again. There's just so much uncertainty right now, and it's not easy trying to forecast this market. It's crazy.
It really is. If you think about it, I mean, I've been in this 22 years and I've never seen, we got a war, we got inflation, we got supply issues, we got, just on and on and on. And it's just like, but it's crazy. And I don't think it's going to be, it's going to cause uncertainty, but, people say, oh, this is what's going to cause a crash.
Well, wheat went up, I think 40% this month because, Ukraine exports a lot of wheat. Yeah. And so it affects the whole global prices. And I'm glad I'm no longer in the bread business because now you got to go deliver these price increases. But I went to the store the other day. Now I haven't worked for Oro Wheat in quite a few years. And I haven't bought bread in a long time. And I looked at this loaf of bread. It's like $5.09. Are you kidding me?
Yeah.
And
anyway, I know we're crazy times.
I guess my doctor charged me $20. We're going to ban you, Terry. Had guess. That's great.
That's funny.
This week, I think this weekend is going to be stressful, and it may affect. Chairman Powell said he's going to go ahead with a 25 basis point increase.
Yeah, there
was chatter of him going 50, and he's now saying he's going to go 25. So that's already built into the market, though, isn't it?
Oh yeah, it was built in a couple of weeks. Last week. Wednesday it reacted obviously because that's why the market was down 110 basis points on the bond because if he raised it 50 basis points, the thinking is that it's going to knock out inflation a little bit. It's going to help deter inflation or knock out of the market a little bit. But now that's only 25 basis points. It's going to be like we're still going to have inflation. So
yeah, but think about it. What can he really do about inflation now?
Yeah. He
can't control the price of oil. No. He can't control the price of wheat.
No.
You can back off. You can start pulling back on mortgage-backed securities and pulling some of the money back that you've put out there. But you can't. Now we're being affected by global unrest, and so central banker can't do anything about that. So that's what concerns me the most. It's going to be inflation personified. And hopefully it's transitory, because this nonsense has to stop one of these days. And God willing, it stops tomorrow, but I doubt it. That guy's a absolute lunatic. So don't mean to end on a sour note, but I am going to head up to Canyon Lake with my youngest son today. We're going to go camping and in travel trailer, and that's why it's going to rain. So got a couple of comments here. Let me see what they are. Tempe rent has been so expensive. Trying to hide the house under 400,000 is impossible. It's brutal. And then they couldn't reinstate the Keystone Pipeline. Yeah, fingers crossed there. After being priced out over 30 homes by cash buyers, my daughter closed on a quadplex in Tucson a week ago. The owner worked with my daughter because she's a vet. Nice. I run into that every once in a while. That's great. That's a great story. And I like that the owner says, you're a vet. I'm going to ignore this bidding, and I'm going to get you into this house. We need more people like that. Good for her.
I saw it. I mean, you see the thing like, they have no 100. Yeah, it's 100% loan, so they have no skin in the game. Their skin in the game was when they went over to Iraq for a couple of years and, got shot at, or that's their skin in the game.
You're darn right. Yeah. They got skin in the game, and they also, they're very well counseled on how to take care of that mortgage. It's not just, they're most soldiers they know they get out of mortgage, they got to pay it. And if they're behind on their rent, they get or their mortgage payment, they get called, even though you may be retired from the military. So it's a VA loan is a darn good loan.
Yeah. Yeah.
And
so Terry says, will the prime rate go up a quarter when that happens? No, the Fed funds rate is basically the money that the banks borrow amongst each other. Eventually, the prime rate is obviously with the banks, but they eventually will, all boats rise with the tide eventually. So, that'll be tied to it eventually, that doesn't go up right away.
Yeah. If they raise it 25 basis points in March, we may not see any movement till June.
Yeah. Well, we'll see. When they raise it, typically rates go down because it's already baked in about a month and a half prior to that going on. So, yeah.
Yeah.
But
we'll continue to watch it. I don't expect any inventory changes next week at all. We were hoping that March would be stronger.
I think we're going to be in this. I think this is going to be something that this will be the same. People keep, we're doing a good job of tracking. Week by week, I think it's important to track it week by week, because we are going to see changes. One day does not make a trend, but you put a couple of days and a couple of weeks together, that starts making a trend.
Yeah.
So,
yeah.
Well, I think we're doing the grinding out man's work as far as week by week. It looks boring, but I think we got a good trend line as far as what to look at.
Somebody's got to do it.
Yeah, exactly. So,
well, Pat, have a super weekend, and everybody, to our millions and millions of viewers, thanks for watching.
Take care. Bye.